The threat of a nuclear meltdown in Japan has triggered a meltdown on the financial markets. Tokyo's share market plunged more than 10%. Fear spread throughout the region, all the way to Australia. Here's finance correspondent Philip Lasker.
As if rebuilding their crippled country wasn't difficult enough, Japan's leaders now have the fate of global financial markets in their hands. How they manage the nuclear disaster will dictate what sort of impact it has.
People are, given sort of prior experience, a little bit untrusting of what the government is saying in terms of the situation with the nuclear reactors in Japan. So there seems to be an increasing degree of fear and panic, and that's clearly what's driving markets.
Tokyo's Nikkei index plunged 14% shortly after reports of another nuclear reactor explosion and Prime Minister Khan's warning around midday of increasing levels of radiation. The selling spread to other markets throughout the region as investors dumped stocks. The Australian market fell another 2% to close at a 6-month low.
What these natural disasters represent is a loss of wealth, and whether it's what we saw in Queensland or in Christchurch and now in Japan.
And the expectation of higher interest rates from the Reserve Bank has been turned on its head as investors rushed to the safety of short-term government bonds.
We're now at the point where we're virtually pricing in a full 25 basis point interest rate cut from the RBA before year end.
Some analysts who expect the turmoil to be short-lived are also hoping history repeats itself.
When we look at the 1995 Kobe earthquake or the 2004 earthquakes, Japan shows its resilience and does tend to recover quite well.
But right now, investors are looking no further than the next 24 hours to the reaction from markets in Europe and the US. Philip Lasker, ABC News.